Hello traders, good morning. This is Yanis. I'm glad to be with you for this new 2021 trading year. I hope that all our dreams, your dreams and expectations will materialize, at least most of them. So without any further delay, as we always do, we are going to have a look at the dollar index chart before addressing the pairs that I personally think might be of a great interest for this new trading week. So here's a chart of the dollar index on the weekly. What can we see? We saw that the dollar index gained a lot of strength for the past weeks, for the past months. It hit an important level of resistance into the $96.50, $97 area. And despite the fact that the bulls try to push further up, right now the pair is in a small retracement, which is very healthy. Sorry, not the pair, the index. The dollar index is in a small retracement, which is extremely healthy. We can see that the last week closed with a bearish candle, a topping tail. So I'm kind of expecting the dollar index to retrace to the 95, and eventually that would be the confluence 95, 94.50 of the 200 moving average and the 20 moving average on the weekly time frame. So we could see, or we should see, some the dollar pairs losing some steam at the beginning of the week at least. However, the dollar index remains extremely bullish as long as on the weekly it continues trading above those moving averages and hopefully continue making higher highs as it has been doing all these past months. Dropping down to the daily time frame, we can see that we are now in that retracement we talked about on the major time frame, on the weekly time frame. The pair has closed below the 20 moving average, and now it's heading either towards those previous highs here in the 94.50 or slightly above in the $95 area if it reacts to that ascending trend line created here on the daily. No matter what, it shouldn't close below the $94 mark. So dropping down to the 4-hour time frame, we see yet again the bears taking control with very big statements. This is a huge bearish candle on the 4-hour time frame, our trading time frame, which would indicate that the downtrend is about to continue. And I think that as soon as that level here, 95.55, is broken and we have a close below it, then the dollar index will trade quite lower. So going to the first instrument, the first pair that I would like you to have your eyes on is the euro dollar. So allow me to go to the major time frame before switching to the euro dollar. What can we see here? We can see that the euro dollar is obviously in a downtrend. Okay, it's very important. All the past months, the euro is losing steam and it's losing value. So it dropped from 123 to now 113, which is about 1,000 pips. However, now it seems that the euro is reacting, the euro dollar is reacting, and it's not reacting only because it has hit that important support area. And as you can see, we are over a couple of months where the bears cannot push below the 112.50, and actually the pair has reacted and now it's pushing higher towards that small resistance here. I think it will be broken, and the major resistance that we should see would be in the 115 whereabouts. So that does give us about 150, 200 pips to go long eventually. And the reason why I'm biased towards long positions right now for the new trading week on the euro dollar is because dropping down to the daily, you can see that the pair manages to make higher highs compared to the previous one and also higher lows. And we do have an important trend line here, which will serve as a support. Interestingly enough, what I didn't saw, and I'm seeing it here on the weekly, is that if you draw your fibs on top of everything from here to that higher points, you will see that, sorry for that, you will see that the pair has not only reacted to that level, the 112, 113 area, but it also has reacted strongly to the 0.618 fib retracement, which, as you know, is quite important. And this is one of the additional reasons why that pair now is going up, at least for the moment. So getting back to the daily time frame, okay, we are looking at some good bullish daily candles, which should be able to push price higher and get it over the 114 area. So right now, the area to monitor for your entries eventually, if you choose to go long on the euro dollar, would be to monitor that 114 area, wait for a close above it, and then you can eventually enter a long position with a good risk to reward ratio. I would personally place my stops below here around the 111.80 price tag, and my target would be the 116. So that would give me over 250, 300 pips target with, let's say, 112, less than 100 pips stop loss, which is a good risk to reward ratio. Now, dropping down to the trading time frame, the 4-hour time frame, you can see that we are into we are into that ascending structure, which is creating higher highs and higher lows as well. And interestingly enough, you can see that despite the fact that we do have quite some reactions from the bears, we are seeing either a continuation of important bearish candles or big ones who try to push and close way below the current levels. We are looking also at the same time at the same, if not more important, bullish reaction each time. And this is why you can see that we are not really having lower lows here. So we are in a sideways movement. Okay, that's obvious. However, because of the small details and mostly because of the fact that on our trading time frame, the bulls managed to close above the moving average, both the 200 and the 20 moving average. And as you can see, they are now all hooking up and looking upwards, which is always a very good sign. So hoping that they will serve worst case scenario as a very good support, we are now aiming towards more important targets. And for me, the next one would be 116 for the euro dollar. The next instrument that I would like us to have our eyes on is gold. Gold is very interesting at that moment, and this is for the reason that it's in the middle of nowhere. As you can see, there's a lot of room and a lot of space to trade either long or short at the same time. We are actually exactly in the middle of that range between 1900 and 1700. Okay, so we are in the 1800. That gives us 100 pips to the upside at least and 100 pips to the downside at least as well. So what I would be looking for if gold presents an interest to you is those key components for me. Dropping down to the daily, okay, we are actually flirting with the 200 and the 20 moving average on the daily, and by flirting, I mean we are below, obviously, but these would be for me the two key levels that I would watch. Would be waiting either for a close above 1800, okay, which would indicate that then my next target would be the 1900. Of course, obviously that can create an area of resistance here, so you would need to have your eyes on it. But for me, the only weight that I need to be aware of and to wait for is that I need to have a clear image on how the pair will behave on the daily here, and on the 4-hour or trading time frame. I'm kind of expecting it to see moving further up and closing above the 20 moving average, which would favor my long bias, unless this is a false break, price manages to get back down and closes again below the 200 moving average on the 4-hour, in which case my long scenario will be off the table and I would be biased now to go short. So for me, these are the key and very important levels for gold. And I know that many of you do like trading gold, as I do, despite the fact that we are not looking at that pair, at that instrument a lot. But we are getting messages that you're quite interested about gold, so we may give gold some added attention from week to week. So gold right now is in a sideways move, okay, which is more evident on the daily time frame. There are some key levels to watch. The moving average is here on the daily, the 200, and the blue one, which is the 20. And at the same time, keep your eyes on the trading time frame to see if that close and break above the 200 moving average on the 4-hour time frame will be sustained, in which case we would be looking for a close and a hold above above 1800, which would lead us to our target, which would be first target 1850 and then 1900 for gold. If that doesn't materialize and we get a close below the 200, then we would be aiming for the 70-50 area and then further down to the 70. Okay, so keep your eyes on gold. I think it can provide a very good risk to reward ratio for your trades. Now, the last pair that I would like us to have our eyes on for upcoming trading week is the pound dollar. And the pound dollar is also in a very important and critical level right now. However, my personal opinion would be for my personal bias for the pound dollar is bearish, and it's extremely bearish, and I'm going to explain why, despite the fact that you are looking at that reaction for now 3 weeks, okay, where price has reacted to that support area here, but also and mostly on the weekly to the 200 moving average, which is extremely important. However, now on the weekly, the pound dollar has hit the 20 moving average, and it's also hitting the top of that descending channel that I've drawn here for you. So that area is very critical for 3 reasons. The 20 moving average, which is now be tested, that resistance area in the 135, 70, 80 price tag, and that descending trend line, which is the upper line of that descending channel. So if you drop down now on the daily time frame, you will see why I prefer having a short bias for that pair, despite the fact that it does trade above the 20 moving average. It has reacted to the bottom of the channel, but now, like I said, from the weekly, the daily is hitting now a wall. It's a very important support resistance area here, and the descending line, the upper line of that descending channel. And as you can see now, we are also, despite the fact that we are above the 20 on the daily, we are still trading below the 200 moving average, and we have a very clear structure with very clear lower highs each and every time, each and every swing, as we do have lower lows each and every swing as well. So that tells me that the pair is in a downside spiral, and it's in a very strong down move right now. So we need to be cautious at those levels because they are resistance levels. I'm expecting the pair to continue its downtrend, at least to retest the previous lows, and that will give me an excellent risk-reward ratio trade. But I will be waiting and dropping now to our trading time frame, the 4-hour time frame. As you can see now, the pair seems to be making a double top, and we do have a bearish 4-hour topping tail candle here. So I'm kind of expecting that to continue to the downside. It will test and try to find some support on the 20, but I'm hoping and I'm seeing that it won't actually find it. So I'm kind of expecting it to drop down to 134 at least. That's my first target to the downside. However, like I said, I will be willing to wait and see. Be aware that you may have fake moves, you may have a fake closure above for a few pips. That doesn't really mean anything. However, that would mean that your short is cancelled, at least for the moment, until you do have a close again below that upper line of that channel. Okay, so I'm kind of expecting the pair to move south for the new trading week. And my target personally would be around the 134 area. That would be the first one. And at that time, the 200 moving average will be relatively close to be used also as a support or as a resistance to the down move, as would be those previous levels here. So everything concurs that 134, 133.50 should be the next levels to watch if we go south from the 136 that we were or we are right now. Okay, so that is all for the Forex pairs for upcoming trading week. I hope to see you all next week. Thank you very much for being with me.